Hello, welcome back to another video. Hope everyone had a great Christmas and everyone's had a good New Year. Hopefully 2025 is going to be a good one. In this video, I'm going to cover my 2024 stats and do my usual December recap. So running through all the trades, the buys and sells I made in December. So as usual, let's dive straight in with the slides that I usually do with my stats for the month. All done in Stockopedia. So this is the one for the month. Just check, yeah, my mouse is up. So much for the Santa rally. I was hoping that history would ring true again and we'd get a nice rally in December. Didn't really happen. We did manage to eke out 0.5%, so better than nothing, I guess, but it's not quite what I was hoping for. The FTSE All Share was down 1.26, so we again did quite well against our benchmark. Quite a drastic outperformance really, even though it's only 0.5%, so not too bad at all there. And you'll see that I'm quite heavily in cash at the moment. There was a lot of sales in December, which I'm quite happy with because that 0.5%, even though it's not very much, I don't think I would have achieved that like last year or so. My sell rules that I have now, I'm cutting losses sooner and taking profits on the way up. I think are really helping in terms of the returns. The next one is the year to date. So this is we've finished 2024 now. This is for the whole of 2024, and it was a total return of 14.68%. Versus the FTSE All Share 5.57%. So we actually absolutely trounced the UK stock market, which I'm happy with, very happy with. And if I could average 14-15% return a year every year, that would be amazing, that would be incredible. And I think that would, any professional, well, I'm not a professional, but I think any professional investor would be very happy with that. And I would be very happy with that long term. I'm okay with this return, but I know that I could have done a lot better. I've made quite a few mistakes this year. There's some poor decisions. I let some losers run too long. I took some trades that I didn't. So even though that's an okay return, I know I could have got in the 20s this year if I got to do it over again with the knowledge that I have now. But I can't be too hard on myself. As I keep saying in these videos, I am still very much early days in my trading, investing career. I'm learning. These years are my very much educational years, so not too bad with that. I'd give myself like a B-, C+ for the year. We'll go B-, let's be a bit more positive. So yeah, not too bad at all. I don't think there's anything else on this slide. The only thing to mention is the Santa rally. So we were about 14% at the end of November, so I was really hoping for that kind of Santa rally just to get us up closer to 20%, but alas, did not happen. And let's see if we can beat that in 2025. And the next slide, what is the next slide? This is the all-time one. So this is from the beginning of 2022 when I started this portfolio. And for the first year, I didn't have too many stocks in this portfolio, to be honest. So it's really 2023 that I really started this. I was still very much doing value investing during 2022, but I did have this portfolio set up for kind of the more momentum style investing, and 2023 is when I really got into it. But we're 29% since the inception of the portfolio, which over 3 years isn't amazing, but it's not too bad. And again, compare that to the FTSE All Share, the UK, which is up 5.44% for 3 years. It really has been atrocious in the UK markets. It's not too bad at all. I think though, I haven't decided yet if I'm going to or not, but I think I probably should be comparing myself to the S&P 500 because the UK market, if we're being honest, certainly the last few years has been a bit of a joke, so it's not difficult to beat it. So I might change my benchmark to the S&P and give ourselves a bit more of a challenge because let's face it, I could just buy an S&P 500 tracker. So I've set it to FTSE because I'm based in the UK and I have a lot of UK stocks in the portfolio. but there's nothing stopping me from buying an S&P 500 tracker. So if I can't beat that, then I may as well just buy it. So I think for 2025, I might switch to the S&P 500, give ourselves a bit more of a challenge. And then the next slide, the usual one, this is the current makeup of the portfolio, ordered in terms of value, so that percentage of the portfolio. So Meta's still sitting up there, the largest stock, still going strong. This cost base here, this is less than the initial cost base because I've already done a third of the position sale, took some profits on it a while ago. So it was up around I can't remember exactly what it was, 4,000 something initial cost. And we're up 238% on that, it just keeps on going. And then the second is a stock I only bought, which I'll get onto later, a few weeks ago now actually, which is already up 50%, which is fantastic, and that's Raspberry Pi. But yeah, you can see, and all of the lower ones are ones I've taken partial profits on. So in terms of, where the initial entry is less than 4,000, it's where I've taken partials on. So yeah, it's makeup of the portfolio is looking really good at the moment. We had a bit of a consolidation in December, especially with the US stocks, but all's looking quite good. The only one that's down is Google, and that's a fairly new entry, so that's fine. So let's jump on to the trades we made in the month of December. So we'll start with our buys, as we usually do. We start off with an L. This one didn't work out. So this is Skechers, the US, let me close that so it's not quite so cluttered. Skechers, the US shoe brand. They do all the sporty, comfy kind of shoes. They do running shoes, golf shoes, lounge shoes. Everyone knows who Skechers are, I would assume. So these have been on the watch list for a while. And yeah, just been waiting for an entry opportunity. I had this resistance line in here from this previous high, so it wasn't a downtrend. You could consider this going sideways, but kind of in a downtrend. This was the previous high, so I had my resistance line there. It broke through it here, I entered, and it failed. I put the stop below the 150 line down here, as it was a sensible kind of technical level to put the stop at, and it was within my 10% range. That's 8%. So perfectly viable place for a stop. And it came down, I got stopped out, and it's gone back up. So I don't think I did anything wrong here. It's just one of those, half your trades aren't going to work. So that's just one of these. You could look at this and say that I could have stayed in it. It kind of touched it, and it was below it again the next day, but came back up. So maybe this will come up and carry on and be a winning trade. But it went below it that day, and it started below my stop loss on the next day. So I sold out for whatever reason. Anyway, we're out of that one. If it does come back up and push through here again, I think I'd certainly want volume. But if it pushes through here again with volume, I will re-enter. And we'll give it another shot. And that was targeting a short-term trade. So it was profits at 10%, profits at 20%, and then the final third at the break of the 50-day moving average. And the reason for a short-term trade and not a long-term trade is because the stock has been in an uptrend. If we had taken the trade here, so there's a long downtrend here. If we put our level here, that's the most recent high. And if there was volume on this day, let me zoom in. So this was the most recent high above the 150, which is the thick white line, and it broke through here. There was volume, you can see down here there was a volume spike, so we would have entered there. If we'd done it here, when it's moving from a downtrend into an uptrend, I would have done it for a long-term trade. But as it was already in a long-term uptrend, we targeted a short-term trade. And the reason for that is just, if it's already been in a prolonged uptrend, there's less left of the run, no matter how long the run is. If you've already been going for a year or so, you're closer to the end than you would have been at the start. So I just take short-term trades when it's already in an uptrend. That means I can get in and out quickly. And then if it formed a new base and went up again, there's no reason I can't take multiple trades on the way up. Google, I mentioned this earlier, recent entry. Come on, load up. There we go. So we've been in this before, made some very small profits on it, nothing crazy. This was a resistance line I had on the previous all-time high. It broke through the all-time high with a lot of volume. You can see down here these volume bars, these skyscrapers coming in here. So we entered once it broke through that level. It's just been going sideways since. Volumes, thankfully when it was dropping down here, the volumes dropped off. So that's a good sign that it is, obviously there's no guarantees, but that's a good sign that it is going to move higher because there's not volume on the downside. So it's just, we're just waiting for the next burst of energy upwards. And again, this is for a short-term trade because it's been in a prolonged kind of uptrend since March 2023. So a couple of years now. So this is another short-term, just get in, make 15, 20 odd % if we can, and get out. This one, it's down 2.5% today, but that's fair enough because it needs a breather. This is a UK stock called Raspberry Pi, and they do mini customizable computers which are used by programmers and that type of thing, and coders. And basically it's a kit, they sell kits where you can make and customize your own computers basically. It's for techie people, but they are releasing products for more layman people. But it IPO'd earlier in the year, was in a downtrend from the IPO, broke this trend line. I thought about entering on the break of the trend line because it was above the 150, but I didn't. What was I going to say? Oh, that would only be the 50 though, wouldn't it? Yes, I'm not sure I could have entered there. But it didn't have volume. You see down here, this white line is the average volume of the last 50 days. It wasn't above the average. So I put in a trend line from the previous high. And when it broke through here, there's a huge spike in volume. So obviously a lot of people were waiting for the same thing. So I entered then, caught it quite near the breakout, which is nice. And ever since then, it's just been skyrocketing. And we are currently up, as of today, 54% in, well, I entered on the 11th of December, so less than a month. So that one's going really, really well. This is a long-term trade because it's coming out of the base. It wasn't in a prior uptrend. So we will sell a third once at the break of the 50-day, a third at the break of the 150-day, and then a third on our trailing stop loss. So we're really going to give this room to run. It does mean that we are opening ourselves up to some serious drawbacks. I mean, if this came all the way back down to the 50-day now, we're basically getting back all of our gains. But that's what I want to do with stocks that are coming out of a downtrend. So we're going to give them the room to run, and hopefully this maintains strength. Obviously, it's going to take breathers, it's going to have drawbacks, but it's a recent IPO, very successful, putting up some good numbers, potential to be a really good growth stock. So hopefully this is a success, and we get a multi-bagger out of this, is what I'm hoping. But we'll see what happens. And then another UK stock we entered, a little micro cap. I should say that Raspberry Pi is around an 800 million market cap. So for the UK, still a small cap, but not micro. Windar Photonics is definitely a micro cap. I think it's around 50 million, 60 million, around there. This company they do LiDAR, so sensors that go on wind turbines to accurately detect the direction of the winds and gusts and gales and lots of wind data to perfectly align the turbines to generate more power, so like higher quality, more efficient power. And they say that their products will improve the output of a wind turbine by between 1 to 4% annually, which doesn't sound like a huge amount, but if you compound that over years and a wind turbine is making 3% more per year power, it's actually very much worthwhile for the owners of the turbine. So they do that. As I say, microcap, I really struggled to get an entry on this. This is another one that's a recent Actually, I don't think it is. No, it's been going for a while, but it was in this long base here, quite a deep base, a lot of kind of a high percentage between the top and the bottom, but a very clear upper limit to it. So I had my line in, I've just been waiting. We broke through here. If I punch in, you can see again, huge volume uptick. I don't know what caused it, but it looks from this volume like some institutions started getting involved, which is what we want. We want institutional money to start coming in because they will be buying consistently over a long period of time, and that should help the stock price go up. So I entered when it broke through here on this volume spike here. I have not got a full position. This is a very illiquid stock. So I am obviously by no means investing large sums of money in relation to the stock market, in relation to other players out there. So I wanted a position which was £5,000. I could not get it. So I ended up buying, I think I've got a £2,500 position, and I had to do that in 2 separate buys. I'm sure on some days there's better liquidity than others, but I just got that, and I decided not to get any more than that because that did worry me that if I do get stopped out, or even if I want to sell into strength, am I actually going to be able to sell? Especially if I was breaking down through a stop loss. If I couldn't sell and I was just left holding, then that can quickly turn into a very big loss. So I limited my risk by only having a half position. Also, obviously that limits the upside, but I'm happy with that. And if I can't sell, I'm losing less, aren't I, in terms of percentage of the portfolio. So this was a very recent buy. This was on the 18th of December. It's been over Christmas. The stock market's been very quiet over Christmas, so not really much happening. We will see what happens with this one. But because it's very liquid, you have some huge moves. You can see all these. Let me get out the volume. There's big red candles, they're blue on mine, but big green candles, huge movements on days just because of that lack of liquidity. The share price moves very easily. So I'm hoping we get a bit of breathing room between where we are and the stop loss, just so it allows for those big swings. But we are now 14% above the stop loss, so hopefully that's enough to just give it a bit of wiggle room. And then I mentioned earlier that we have quite a lot of the portfolio in cash at the moment. That's because we made a lot of sales through December. A lot of these are partial sales, which I'll discuss, but also a lot of these were exiting positions. So Palantir, this has been a very successful trade. I'm going to make a video which is my best and worst trades of the year, which is going to be a separate video to this, so keep an eye out for that. But spoiler alert, Palantir is one of those, though I have sold out a little early, but I stuck to my rules. But basically, we had an initial buy all the way back in August. We had 2 partial profits on it, and then we topped up our position in November and took 2 partial profits on it here. And then, so that's my 10 and 20%. And then we had and this was the 10 and 20% down here of the initial position. And we had the final third of this position and the final third of this position still running. And my rule for that is, once I've taken the 10 and 20, I use the 50-day moving average as my final stop. So if it fell through there, I'd sell. Or if there's a very clearly defined trend line, I will use the break of the trend line. And you can see here, I had this trend line drawn in. It was very clear. It was in a strong upward move. If I move this to here so you can see where I was, very clear upward trend line. So I was using that as the break of the day, that I would sell at. It broke below on this day. I sold. Very happy to lock in decent profits. And where are we? Palantir. So on the initial move, this trade here, taking the average of this sale, and the final sale, it was a 49% profit. And this trade here with these 3 sales was a 21.3% profit. So 2 very successful trades. The total move from here up to the top was 128%. So you could say, yes, if I'd held this for a long-term trade, because it's not even broke the 50-day yet, I would still be in it with a full position. So it's one of those. It could have been better, but at least I was in the trade. The reason for taking a long-term trade is because we were already in a huge uptrend. And this could, obviously Palantir has been one of the huge success stories of 2024, but that's hindsight. This could have easily come up here, rolled over and gone down, and I gave all my gains back. So I'm happy to be in taking profits on the way, which I can recycle into new trades. You're sometimes going to get ones where you could have made more, but as long as I'm banking profits, I don't mind too much. Gamma, we took a partial on Gamma Communications. So this is a UK tech stock. Was in this huge long base. I bought on the breakout here. I did a partial sale back here, so this is a long-term hold. So I didn't sell at the break of the 50 here because I had this trend line in. I'm not sure that trend line, I think that trend line only came from here. I'm not sure why I didn't sell there. Maybe I didn't have that, I might not have had that rule at the time. When's this? Back in July. No, I didn't have the rule there. So we didn't sell at the break of the 50 day because I didn't have that rule. We sold here because it broke down through the 50 day. And then it's also broken down through the 150 day recently. So we sold another third. So we've sold 2/3 of the position left. We've got 1/3 left running, and that will be sold at the break of the trailing stop loss. And the idea is, so this stop loss, I've said this many times before, so apologies if you heard it before, but those that haven't heard it before, the trailing stop loss, I move up the 150, which is this thick white line, at the most recent low point. So when it comes down here, low point, and then goes higher again, it's the point at which the low point touches the 150. So down here, it would have been down here where it touches it. It comes up again, comes down and starts moving up again. It would have been this point where it touches the 150, up, down again and back up. So this point here is where that touches. And that's where it currently is, because we've been in a steady downtrend since. So if the stock now turns and goes higher again, we won't put it to the point at the 150 because it's gone below it. We'd put it to the low point, which would be here. And the idea behind this is we've taken some profits in case it does turn over and fall all the way down. So we're selling near the top. But also we're allowing the stock to have a bit of a shakeout, go sideways for a bit, have a breather, regroup and move higher, and then still retaining a portion of the position for the longer move. Intuitive Surgical, we are completely out of now. And we got a 20.7% profit on this one. So this was targeting a short-term hold. This was before I had my 10 and 20% profit targets that I have now. So I was just using the 50-day. We touched it here, but came straight back out. I'd sold here just into strength. I think I'd locked in 20% or something. Yeah, around 20%. So I just sold some to bank some profits into strength. It came down here, it broke the 50-day, but I'd already just sold, so I decided to carry on holding, let it run higher, and then it broke down through the 50-day here, and I sold the remainder of my position. So this is slightly different to my current rules because I entered this position back in July before I had them. But still, the thought process of a short-term trade, banking profits into strength rather than waiting for it to give it all back. Mercado Libre, and this was disappointing. This one we have been stopped out of. This one was targeting a short-term trade, and for those that don't know, Mercado Libre, oh yeah, I should have said, ISRG are Intuitive Surgical. They are a medical robotics company. They make robots effectively to assist surgeons in surgery. They're quite a well-known healthcare stock, but and I do like them. I've been in them for quite a while, and I've owned them before this trade as well. Mercado Libre are the Amazon of South America, basically. E-commerce site, and they do loads of other stuff besides just selling products, but just think of them as the Amazon of South America. Again, long-term uptrend, as a lot of stocks have been towards in 2024. So we were targeting a short-term trade. We entered on this break. We didn't enter with a full position, and this is something that I'm decided I'm not going to do in 2025 for this reason. So the reason for the partial position is just because I'd been through a rough patch with the portfolio in the summer. I'd had a lot of failed trades, and I reined back on my initial entry. But that does mean when you eventually start winning again, you only have small position sizes. And that's one of the things that happened to me with Palantir. I only had a small initial entry because I've been scared off stopped out of a few trades. So I lowered my entry. And then when you actually get a winner, you haven't got enough in it to make a meaningful difference. But that's why I did that here. And then it showed strength. So I topped up to a full position here on the breakout into, I think it must be an all-time high. Yeah, into all-time high. So it was looking good, and it's just turned over in the weakness from the past couple of months in the US. And there's not much more to it than that. I had my stop loss set down here. It broke down through the stop loss, and we took a 9.4% loss on that position. It's very much a stock that I like. I would really like to get back into it, and you can see here, obviously with hindsight, I wish I had. So this is my initial 10% target, and it just touched it and dropped back. So obviously I wish I had taken a 10% partial there, but I didn't. But it was very close to at least banking some profits, but nevertheless. Next up, Duolingo, another stock that I really, really like. And I took partial on this one. So this is a long-term hold. It's been running really well, really nice solid uptrend, and it's just broken down through the 50-day. So we've taken our first third as profits, which is 24% gain. So we've still got 2/3 of the initial position running, which we will sell at the break of the 150-day and at the trailing stop. So we're hoping this one just bounces around for a bit and then continues its uptrend. Texas Roadhouse, we are fully out of. Another short-term trade. We bought in, it was in a strong uptrend. It went sideways for a fair few months. It broke out of there. I entered here. Not a perfect entry, but I'm reasonably happy with it. It was a good entry. It ran up. We broke through the 10%. We banked some profits on the 10%. We raised our stop to break even. So unless there's a big gap down, once we'd made this sale, it couldn't be a losing trade. And it was just showing really, really strong weakness. It wasn't pausing or anything. So instead of waiting for it to get to my stop loss, I was pretty certain on the day that I sold that it was going to continue down and retest the support down here. So I decided to sell a bit early rather than just waiting for the sake of it. I had to bank another few percent. So the total profit was 7.6%. So not the most dramatic trade in the world, but it's 7.6%. And if you compound those throughout a year, it turns into quite a good return. And this is a perfect example of my new short-term trading strategy working and banking me some profits that I wouldn't have otherwise had. With Melissa, I would have just let this come up. I wouldn't have taken any profits, let it come down. And I may still be holding, actually, because it wouldn't have gone below my initial stop down here. But I'm now out with profits that I can redeploy. And if this does continue higher, I have the option to re-enter when it breaks into new highs. XLX, it's just a hard company to pronounce. Exelixis. This one is going really well. So this was another one where I did a partial position, entry position in the summer because I scaled back my entry positions, and then I added on its next level to top it up to a full position. It's been showing really good strength. Just along with a lot of US stocks, it's been testing its 50-day moving average. It broke through, so I sold a third position here, Again, the same as Duolingo, we've still got 2/3 running, so we're hoping that this continues up. But if it does fall over, if the US market goes into recession or something this year and it gives it all back, we've locked in some profits. It's still going to be a profitable trade. Deckers Outdoor, recent buy, is that? Oh no, it was in November. This was a short-term trade. It's run up. We've locked in 10% profits, and we just wait and see. Yeah, not much more to it than that. We're hoping this is the 20% target, and we will see what happens. And I've raised my stop loss to the to break even, so we can't lose on that trade now. And this one was not a good trade. This is the one when did I buy? Oh no, I bought in November. So this would have been in last month's video. But I bought, to be honest, I don't actually know really anything about this company, which if I hadn't been stopped out in 3 days, I would have gone and done some research on it and done a research snapshot or something so that I knew what I was holding. But yeah, it was in a downtrend. I had this trend line in it. It broke through on decent volume, you can see down here. So I entered, and then it immediately fell back and I got stopped out. And we took a 9.4% loss on that one. So I had a tighter stop loss on this, but I did let it run to the next day because it seemed like it was just a shakeout, but it was a bit of a longer term shakeout. So I don't think I did anything particularly wrong on that one. It's just one of those, it was showing really good strength here, broke through, volume was increasing down here. It just for some reason didn't have the strength to carry on. It might have just been just the general market weakness of the US. It might have been that a couple of months earlier this same setup would have had the strength to carry on up. But I think there was a lot of institutions that were just de-risking across the board in kind of towards the end of November and in December, just selling percentages of their entire portfolios. Right, so that's all the sales. I'll go back on to this one. Yeah, so I'd say 0.5% for December and 14.68% for the year. As always, let me know how your December went, and we're at the end of the year, so please do put in, if you want to, your results for the year. Let's see how people did. I know there's a few people that regularly watch that will have destroyed me, but that's fine. Feel free to post your returns down there. I think as long as it's not a big bear market or something, I'm fairly confident of beating this in 2025. So we will see how we go. And yeah, thank you for watching. As always, please do drop a like and subscribe if you're not already. I do monthly updates. And I will be releasing, I'm going to film it now, I'm going to be releasing a video which runs through my best and my worst, which is probably more important than the best, trades of 2024. So stay tuned for that. Okay, thank you for watching. Hope you have a great day.